Everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Well, it was all about the Fed this week. In Tuesday night's TradeFinder, I had given a scenario where if the Fed came out a little more dovish than expected, it could ignite at least a relief rally. Well, that was pretty spot on because that's exactly what happened. The Fed was a touch more dovish, saying that they weren't even considering, the committee wasn't even considering a 75 basis point rate hike. At the moment Chairman Powell said that in the Q&A, the market took off and rallied significantly into the close. Well, you look to see if there's any follow through. Thursday gave us a resounding no to that. Thursday was a pretty ugly day. In last weekend's recording, I said to look for an ugly day with a big spike in the VIX to mark the end of the selling. Did Thursday count? Interest rates continue to just defy gravity, moving to the upside. Is there any respite in sight for interest rates to pause? And Bitcoin falls to a new level of support. Will it hold there? Before we look at the charts, just a quick reminder. If you've been watching these videos, please hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. It's helpful and we really appreciate it. Now let's look at the charts. At the time of this recording, it is late on Friday evening and the futures market is closed. If we take a look at a chart of the market, you can see a couple things that stand out in today's trade. Number one, yet another close below that all-important 420 level of support resistance, and a doji on the charts. I'll come back and talk about the doji in a moment. If we go back and look at Tuesday, in Tuesday night's TradeFinder, which by the way, if you haven't signed up for TradeFinder, please do so. You can sign up in the link underneath this video. It's free. Every Tuesday night, 9 p.m. Eastern Time, we talk about the markets, we look for trading ideas, and we have a live Q&A at the end. It's a lot of fun. Hope you'll join us for next week. But we were talking about where we were with a close below 420, and we had that important Fed meeting coming up on Wednesday. And I'd made the comments that if the Fed was a bit more dovish than they had been, they could set off a rally. Well, they were a bit more dovish in their commentary. They said 50 basis points, but they took the 75 basis points off the charts in a Q&A. They said they were not thinking about doing that. The second they said that, the market took off and rallied. In addition, and this is where I think the dovishness really came in, was not only are they going to start reducing their balance sheet in June, when at one point in time they had said it would be May, but instead of the $95 billion a month, they're only going to do 47.5. So half of the reduction of what they had originally said was likely going to occur. The market took off to the upside. Again, the instant that comment was made that we're not even considering a 75 basis point rate hike, we rallied right into the close. Well, then what happened on Thursday? Well, obviously you want to see, is there going to be a follow-through day? And the answer to that was a resounding no. Market reversed. Pretty ugly day on Thursday. Last weekend's recording, I said, hey, expect a really ugly day with a spike in the VIX before the selling ends. I wasn't meaning that it was going to happen on Monday. I mean, before the selling is over, I think we have a really ugly day with a spike in the VIX. Well, Thursday we had a really ugly day, but when we take a look at the chart of the VIX, that's not the kind of spike I'm talking about. All we did was come in this range right around 35 or so where we've been trading. What I'm talking about is a spike up to 40 or 50 with a day like we had on Thursday. That's when I think we could put in a legitimate bottom. So when we come back to the markets, again, why did we sell back off on Thursday? Well, my opinion, for whatever that's worth, which is not a lot, is that traders started thinking about it and thinking, well, if they're a bit more dovish, the expectation is they're already behind the curve. If they're not going to reduce their balance sheet as fast and they're not going to raise rates, maybe a 75 basis point rate hike, they're still behind the curve, and that means they're going to raise rates longer. There's going to be more 50 basis point rate hikes, and it's going to take longer for them to get in front of this and get inflation down. Looking at today's trade, again closing below 420, indecision today with the doji. So now you can notice that we are in a 5-wave impulse pattern to the downside, which we were not after last Friday's trade when we did the update for last weekend. Taking a look at the moving averages, I've talked about this before, but I want to bring it up again. You've heard me say numerous times, no security in any time frame gets very far away from the 10-day moving average. Well, the same holds true for the 10 and the 50-day moving average. They don't separate for long without coming back together. Just go back and look at the past. There got a little bit of separation to the upside, back down. Here, preceding that was separation to the downside, came back up. Same thing here, separation to the downside, rallied back up. Over here, separation to the upside, came back down. I think you get the point. This will not last. There is going to be a point where the market rallies and the 10-day and the 50-day come back together. Now here's a question for you. With this wave 4 potential move to the upside, which do you think occurs next week? Do we rally back above 420 or do we break below 400? Which of those do you think is the more likely scenario for next week? Post a comment. Post it in the comment section. Love to hear what your thoughts are on the matter. All right, so moving on to the 10-year, continues to amaze me. Just continues to rocket to the upside. I do feel like at some point we're going to get a little bit of a pause, and here's that reason. That 10-day and 50-day moving average scenario again. See how separated they are? At some point, rates are going to pause a bit. We're a tiny bit overbought with today's move in rates higher. So at some point, we're going to get a little bit of a break. What will be the cause? Who knows? We're hearing all the commentary about another COVID run up north, etc. Who knows? But these two will come back together again like they have in the past, just as I showed you on the SPY chart. So we're going to get a little bit of a rest. We're above 3% now on the 10-year. Seems like a good area for maybe a little bit of consolidation. Perhaps that plays into a potential rally scenario next week. Now, we could go down and break, going back to the SPY chart, we could break down to that 400 level, fill the gap, complete that zigzag that you've seen in the past recordings, and then rally, because we're pretty darn close. It wouldn't take much more to do that. But the doji is interesting with the fact that we are a little bit away from the 10-day moving average with that doji. So again, we'll see which plays out first. The dollar, there's another doji, but I'm happy to see that the dollar recovered with the rally that occurred right after the Fed announcement, or actually during the Q&A afterwards, which is when the rally really started. The dollar fell off. That was okay. The dollar did need to come back down just a bit. Notice how it closed the gap with the 10-day moving average. But there's that separation again between the 10 and the 50-day. So we've got some extremes here where these things will need to come back together, and they will, because they always do in this kind of scenario. Thought I'd show you a chart of gold. You can see that gold is holding right at this support level of 175. It's not in a 5-wave impulse pattern at the time. And look at there, another doji. So call Friday doji day in the markets. That means a lot of indecision going into the weekend and what happens next week. That's why I was asking, which do you think occurs first? The rally above 420 or a sell-off below 400. So with gold sitting here at 175, we look at the moving averages and we hit the 10-day moving average on the high. Perhaps we get a little bit of a bounce in gold. Perhaps the dollar rests a little bit, and that gives the metals a chance to move to the upside. All right, going back to the U.S. markets on the Dow. The Dow was the one market that hadn't broken its support level there at 330. It had held on to it even yesterday's trade, but not in today's trade. Close below 330, just barely, and we have to see if it has a follow-through or confirmation day. If it does on Monday, if the selling continues at the beginning of the week, then the Dow and the diamonds probably come down to that 310 level, which is the Wave 5 forecast. Looking at the Qs are almost done. Talked about what a great Elliott Wave 5-wave impulse pattern this has been. Spot on as it could possibly be. 61.8% on the Wave 4. And then moving down here, hitting the top of the tap box for the Wave 5 is 77% extension. That probably goes down to 100%, which would put it right in the midpoint of this tap box here. Time and price projection is what that stands for. Little bit oversold today, but not significant. So if we did have some selling to start off the week, we could go down and hit that target pretty easily, breaking below that 320 level yesterday with follow through today. Still looking pretty rough for the Qs. The Russell broke below that 190 level and it hasn't been able to get back above it. So it did on Wednesday with the rally, but that was short-lived. Broke below it yesterday in the ugly day and confirmed the move lower there today. So if we look at the moving averages on the IWM, a little bit oversold there, so perhaps we get some sort of a small little bounce to start the week, but it looks like we're probably coming down into this wave 5 tap box here on the IWM at some point in the not too distant future as well. The only thing that could change that is obviously getting back above 190 with some follow through. Bitcoin, well, there we go. We were talking about this for a while. It was trying to hold above 40,000, and then it couldn't, and then it was testing it. Every day it seemed like bumping its head against 40,000. I made the comment in Tuesday night's TradeFinder, I do feel like it's going to give up the ghost and we're going to see 36,000. Well, we did today. So now we're at this next level of support at 36. If you've been watching these videos, you know that everything is in increments of 4,000 with Bitcoin. So if it can't hold 36,000, then 32,000 is next, and then it gets kind of ugly after that. But it will try to hold here at 36,000. You can see there's some support there going back to January. But I would submit that that support's not as strong as the 40,000 was, but it is in support nonetheless. So we'll see if it holds. Well, let's take a look at some of the international markets. Looking at Canada, boy, what a change has occurred there. No longer in a 5-wave impulse pattern. It's trying to hold 37. It doesn't look like it's going to. It broke below it, closed below it today. It was able to hang on in yesterday's trade, even with it being an ugly day, but lower today. And then the next support here on the EWC is down here at 36. But if the markets rally, perhaps it can get back above 37. It needs to do that, but it's got a lot of road work in front of it now with the resistance, significant resistance at 38 and even more up at 39 with that gap just above it that needs to be filled. So perhaps we churn a bit longer, a la what we did in December, January, and February on the EWC. Looking at the EWA, you've asked to look at that. It's more tradable security for Australia's market and broke a pretty significant level of consolidation here, going right through this area around 24.5. And there's another doji, so add in the international markets to our doji day. This wave 4 is very close to being disqualified. This 5-wave impulse pattern to the upside, 77%. It gets disqualified at 78.6. So just hanging on by a thread there of this 5-wave impulse going away, and the Aussie market perhaps churning some gaps to fill up there, and also a bit of an expanding triangle here rather than a contracting one, which is what we normally see, but it's still a pattern that bears watching to see which direction we break in the Aussie. We looked at Brazil a while back, so I thought I would go ahead and update you on the Brazil market. At that point in time, it was trying to hold in this area of support right there around 33 in a pretty decent looking 5-wave impulse pattern. Well, we broke below that with all the selling that's been going on. It's still a viable 5-wave impulse pattern. The wave 4 is corrected 69%, so that's still within the range of where the pattern is still technically qualified, but it's looking a lot weaker on the Brazilian market than where we were just a couple weeks ago when we looked at the chart. Note that we are just a touch oversold here, so perhaps we bounce back up to test that 33 level. We'll see. Wanted to bring in the UK because that's kind of ugly too. There's another international market with Doji Day sitting here right around that 31.5 level. You can see 32 is support. It broke that. There's a little bit of support here at this 31.5 level. It's not real significant, but it's some. Perhaps it holds, or perhaps we come down and test the lows that occurred back on March 7th. That seems like the likely scenario in the UK market. However, perhaps not right away because we are oversold, and with that doji, perhaps there's a bounce out of the UK market as well. Last week we talked about Tesla and what did Elon do to his stock when he sold all those shares for this Twitter acquisition, etc. And he came out and said, hey, no more selling. We rebounded in that market rally that occurred on Wednesday and looked like perhaps we were going to come back up to that 1,000. No, reversed it back down yesterday and closed even lower again today. Doesn't look like we're going to head back up to that 1,000 level anytime soon. So you can say that Elon broke it. It had consolidated in there pretty well at 1,000, and then he had that big sales day where he sold the billions of dollars worth of shares, and we just haven't been able to move back up to that level since then. And tiny bit oversold, but not that significant. So if we're looking at Tesla, the next level here is right where we are now, support at 840. It's trying to hold that. You can see with these lows here, it's trying to hold in this 840 level. And if it breaks that, there's a little bit right down there at 800 that it could try to hold. If it doesn't hold 800, then it starts to get a little bit dicey for Tesla. I mean, we had this slow crawl up here, so it could be just a slow crawl back to the downside. But we're a long ways from that now. It will try to give that 840 a hold and see if it can get back up. But to get really healthy again, Tesla needs to try to get back above 1,000 with some follow through. So I hope you found this informative. I hope you're having a great weekend. Happy Mother's Day to all the moms out there on Sunday. Hope you enjoy your weekend and you're spending it with loved ones. Thanks, everybody. Appreciate it. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.